10 years ago, I think most of the deal flow was growth capital opportunities where you went in as a minority investor. And generally the investment thesis was to buy at a multiple, PE multiple of, let's say, maybe 4 to 5, and put new money into the company, and then the company would grow over the next couple of years, and you would seek an IPO for the company together with the management. The return profile was normally expected to double the profits, to double the PE, so 2 times increase in PE, 2 times increase in profit would yield you 4 times return on your investment. That was a very typical investment thesis. Most of the companies that we looked at needed new money in order to expand the capacity, to buy new equipment, to meet what they saw as a growing market demand. Today, that has changed dramatically. There is not the sort of growth in for the companies. They typically are looking at a very competitive marketplace where they're trying to improve profits as opposed to just simply grow sales. Second, IPOs are more and more challenging for small middle market companies. We see more buyout opportunities across Asia, and I think what's driving that is number one, succession issues. The owner is older, his children are not involved in the business, and so he's thinking about who will take over his company. Number two would be maybe there's multiple shareholders, and for whatever reason they have a different view about what to do in the future, and so they think the best way to resolve the issue is to sell the company to somebody else. A third issue is companies that are having problems. They need to restructure their operations, or they may need to pay down debt. They're finding that the competitive landscape is too challenging, and so they're thinking about if they sell it to somebody else, let them take over those issues. I feel actually now is really one of the best times for us to look for deals because I think there's less competition than before. So before the financial crisis in 08-09, there were a lot of different players. The investment banks were investing off their balance sheet. Hedge funds were actually going into private equity. Strategic investors globally were very interested in China and Asia, so they were competing for deals. Today I find that the investment banks are restricted from doing private equity, so you find them not investing. Hedge funds have completely separated themselves from private equity. They're not doing that anymore. Strategic investors in Europe and North America seem to be hesitant about committing investment capital to China, so we don't see them so often competing with us. And some of the GPs that had been out in Asia before, who had set up office, are actually finding themselves closing their Asian offices and retreating back to Europe or to North America and becoming more focused in just that geography. So from my point of view, there's less competition now than I've seen in 10 years for deals. All of the portfolio companies that we've had so far are operating in multiple jurisdictions. So we typically are operating in Taiwan, China, Hong Kong, Malaysia, Thailand, Singapore, and then maybe some of the companies are also operating in Indonesia and Korea. From those operations, we are exporting to customers all around the world. I think in more traditional businesses and manufacturing, you're probably looking at somewhere between 6 to 8 times multiple of operating income. And typically these companies have a history of operating income that you can evaluate and you can sort of analyze and make some sort of predictions about the future trends. In the other areas, social media and healthcare, oftentimes you're dealing with in Asia at least, you're dealing with relatively new companies that don't have a track record. You're dealing with perhaps no operating income, so the multiple of that doesn't really make sense. And oftentimes the management is not wanting to do a sell out completely or give you a majority. There's only a minority stake available. So I think the valuation metrics are extremely different.